Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide online divorce mediation and valuation services in St. Louis, Missouri. Today, we will discuss business valuations and changes in the IRS for 2022 with a former IRS auditor, Mike Gregory. Mike Gregory is the founder and owner of Mike Gregory Consulting, LLC. He brings 28 years of experience with the IRS in a variety of capacities. During his last 11 years with the IRS, he was an IRS territory manager with responsibilities for up to 23 states, with an emphasis in business valuation and specialist issues nationally. He's also was involved with creating and talking to the IRS about the discounts for lack of marketability and also reasonable compensation. The other book that he has written is called The Collaboration Effect, which basically brings together neuroscience and kind of negotiation techniques in order for you to work with the IRS if you needed to in some capacity.
I took this information. I went back to my friends at the IRS and I said, what's going on? And they said, there's several things going on here. One is COVID. COVID says you don't go to the tax, you don't go and look at these returns by hand. We put in these algorithms. So things that folks would have looked at by hand and said, I think there's something here, or this doesn't make sense or whatever. They put together some algorithms. How well are those working? Maybe not the best. Second item. The IRS at one point said at their service centers, they had 21.7 million pieces of mail that weren't open. How do you file an estate tax return? By paper. They're sitting on trucks. Now they've worked their way through this. They're now down, they say, to about 3 million pieces of mail. But just think about that. They've gone from 21 million to 3 million. So a big issue is they haven't even opened the returns to get them into the system. That's another issue. Another issue is management is not on site. If you're an auditor for the IRS, if you have a no change, you need to explain that to your boss because you want to explain why there's no change here. You want to make that decision as quickly as possible. If you spend a lot of time on a case and it's a no change, we really want to understand what's going on. Why do we waste our time there? But if I give you a refund, they don't really care. So if you're an auditor and you don't want to have no changes, you can say to the taxpayer, what are you asking for? Okay, well, maybe I can give you this no change. We can get it out of my inventory a lot quicker. And the goal is to close cases. They're not evaluated on dollars or dollars per hour. That's actually against the law. But they are evaluated on case closure. So if I can get it closed out and you agree with me and it's a refund, you're okay. And also think about COVID too and the alternative valuation date. The firm may have been worth X, but now COVID hit. And what's that estate worth today? And it's a lot worse because some businesses really were hurting, right?
Right.
So all these things are entering into this. Really don't know why. Those are different theories as to why. But the stats tell us there's something going on at the IRS and it's not healthy.
Well, and the percentages that you gave, it seemed like because you delineated them as estates or gifting. And so in our world, one of them's a gift, one of them's sort of a death, I guess, of of somebody in the estate. But it seemed like more often they were looking at the decedent estate issues than the gift tax. And everybody gets really more concerned, I think, about the gift tax, but maybe not.
Well, on the gift area, I'm just looking at statistics here now. In 2018, 245,000, 2019, 240,000, 2020, 158,000. So they've really dropped off here too. I think that's again back to these mail trucks. I don't know that, but I think that's the gift area has been running consistently with their numbers historically. So that 240,000 number is pretty, if I looked at all the way back to 2013, that's kind of normal. So the 158,000 in 2020, that's really odd. But most gift tax returns actually, again, we're business valuers. We think because we're business valuers, most gift tax returns have closely held firms in them. Actually, most gift tax returns are stocks and bonds and cash or cash equivalents. So they're pretty straightforward. There's not a lot to audit there. I mean, an agent can look at this and say, yep, okay, here's the stock for ABC Corporation. It's on the New York Stock Exchange. It was as of that date. That's what it was valued at. And there you go. So that's the bulk of them. Very high percentage, around 95%, something like that, 95%. So you're really talking about 5% of all those, which if you look at the number that are being audited, you've really got about a 5% chance of all of those being audited. So it's pretty small, but again, size matters. So the larger gifts have a higher probability of being audited than the smaller gifts.